Dear friends, welcome to Weekly View on Markets. This week, markets have staged a sharp rally on the back of good monetary policy from RBI. So, let us look at whether this rally, which has started from around 16,800 level on Nifty, is sustainable. Nifty has given a rally from around 16,800 to 17,599, is almost about 600 to 700 points rally non-stop. So Nifty closed at 17,599. It posted a gain of 518 points for this week and gained about 3.04%. So now we will have to see whether this rally is going to sustain further. So we will examine this. Bank Nifty has given a rally of 2.83%, gained 1130 points, closed at 41,041. Nifty Mid Cap Index closed at 30,353, gained 578 points, closed with a gain of 1.94%. Out of all the sectors, it was the small cap which rallied the most with almost around 4% for the week. So I had been telling in my last week review that we have to look at the small cap sector, and Nifty small cap index has closed at 9,198. India VIX has cooled off. It is at 11.79. All the sectors closed in the green for this week. Realty sector gained about 6%. So we'll see why there is huge rally in the realty sector when we discuss the fundamentals. Infrastructure gained about 3%. NBFCs and financial services sector gained more than 3%. Private banks gained about 2.97%. Auto sectors, pharma sector, media sector, and IT sector all rallied around 2 to 3%. Remaining all sectors gained from 1 to 2%. So there was buying all around in all the sectors during this week. The pessimism that was in the market a week ago has vanished and turned into a optimistic view in the market. Now let us look at technical charts and see what is going to be there in store for the coming week. This is the daily chart of Nifty. The market staged a smart recovery from around 16,800 level. 17,200 level was the resistance. Markets have crossed that resistance also and closed 17,599. So the next hurdle for the market will be at around 17,750 to 17,800 level. I believe that 17,800 level is going to be a very crucial resistance. If Nifty is able to take out this level and close at higher levels in the coming week, it is going to negate the this lower tops and lower bottom chart pattern, and the trend reversal will be there. We have seen that market from 18,800 level has been making a lower tops and lower bottoms. When Nifty closes about 17,600 levels, it will be making a higher top instead of a lower top. So that will change the chart structure So this will be giving a intermediate trend reversal signal. So watch for 17,800 levels for the coming week. Let us look at Nifty Mid Cap Index. This is a chart of Nifty Mid Cap Index. It has closed at 30353 and from below around 30,000 level, that is from around 29,400, it has staged a smart recovery. And now the next resistance for mid cap will be at around 30,800 levels. The mid cap index has to take out 30,800 levels and close when it closes at around 31,200 levels. That is the time this intermediate downtrend will change. So we'll have to watch for 30,800 followed by 31,200 levels for the coming week for the mid cap index. Let us look at Nifty small cap index. I had been discussing that the small cap index is likely to stage a sharp recovery as there is a lot of value buying expected in the small cap index. We have seen small cap index rallying almost from 8,700 to 9,200 levels non-stop. This is almost more than 6% rally. And the next resistance level for small cap index will be at around 9,250 to 9,300 level. And small cap index has to close above 9,500 level to negate the intermediate downtrend. So watch out for 9,300 followed by 9,500 levels for the small cap index. Let us look at Bank Nifty index. Bank Nifty also has staged a smart recovery, and Bank Nifty has now support at around 41,000 level, and the next resistance level is at around 41,500 to 41,600 level. And when Bank Nifty closes above 41,500, it will negate the downtrend and the intermediate downtrend will change in the Bank Nifty. So the next week we should watch for the levels of 41,500 followed by 42,000 levels for the Bank Nifty. Now let us look at some of the fundamentals of the market. RBI policy meeting was there on 6th April, and RBI has surprised the street by keeping the status quo. They have not made any rate hike. All the analysts and the street was expecting a rate hike of 25 basis points. But RBI has surprised everyone by keeping the status quo. Repo rate is maintained at 6.5%. So, but RBI has told that if required, they will raise the interest rate in future. It is not the end of the rate hike cycle. This is what RBI has maintained. And they have also maintained the stance of removal of accommodation. They have not changed the stance also. So RBI governor in the policy statement has told that RBI is supporting the growth in the economy, and given the inflation expectation for next financial year, that is FY24 at 5.2%, and he has given the GDP estimate for FY24 at 6.5. So one is that the rate was maintained, and second is the commentary by RBI governor, which has given confidence to the markets. So markets have welcomed RBI policy and closed higher after the policy. especially rate sensitive sectors. We have seen a huge rally in the real estate sector and other rate sensitives like NBFC companies, housing finance companies, infrastructure companies, to some extent, pharma companies. All the sectors have rallied. These are all called the rate sensitive sectors. We have seen good rally in the auto sector also. But after raising the rates successfully for about 6 times, RBI has given a status quo policy for the first time. We are almost nearing the end of the rate hike cycle. This is what has fueled the rally in the rate sensitive sectors. So RBI's governor's commentary that inflation would come down in future and growth will be maintained has given a confidence to many sectors. RBI forex reserves is maintained at 578 billion US dollars for the week. Specifically, RBI governor has mentioned that we have a comfortable forex reserve situation to take care of the emerging global situation. INR USD rate has responded to RBI policy and rupee closed higher at 81.83 against the dollar. And globally also, the demand for dollars has come down, and dollar index from 114 levels has come down to 102.13. So this will help Indian rupees to be stable in the coming days. Gold price has crossed the 61,000 mark. Globally, we can see that money is moving from US dollars to the gold. That is why we see the dollar index has come down and gold prices have given a rally from 55,000 to 61,000 levels in last 2 weeks. Another good thing for Indian economy is that PMI manufacturing index has come at 55.3 for March and services PMI has come at 57.8 for the month of March. These figures, though, are slightly lower than what it was in month of February, but they are all above 50 mark. When PMI index is above 50 mark, the economy is in the expansion mode. It means the industrial sector and the services sectors are growing in the economy. This is further supported by the direct tax collection, which is up by 17% during the financial year. And GST collections have reached 1.6 lakh crore for the month of March 23. And last several months, the GST collections are above 1.5 lakh crore successively, which indicates there is a good activity in the commercial and industrial sector in the economy. Last week, OPEC nations have cut the oil production, and because of this, oil prices have shot up. It touched $86 per barrel and then finally closed at $84.9 per barrel. Indian economy is slightly worried whenever the oil prices go up sharply. RBI governor has maintained that Indian crude basket that they have forecasted at around $80 per barrel while calculating the GDP growth and the inflation figures. So if oil prices remain stable, we will see a good rally in the Indian markets. Now this is the second week of April and quarterly results that is for Q4 of previous financial year, it will be announced from next week onwards. TCS is going to announce result on 12th, and many other companies will follow. Banks and many companies have given positive business update for Q4 quarter. They have indicated around 12 to 15% growth in revenues and business. Banks and financials will do well in the coming result season. IT sector is also expected to give good results. So, textile is one sector which has been beaten down due to the high input costs. Last quarter, we have seen the cotton prices and the input costs coming down, and textile companies may give a better results during these quarters. We have already started seeing rally in the textile sector stocks for last 2 weeks. Similarly, pharma companies have given a correction of almost 40 to 50%. This is a time to look at some of the pharma sector good companies, and we can buy them with a view of next 1 to 2 years. We'll get good profits. The technical charts and also the economic fundamentals indicate that the present rally which has started in the market is likely to sustain, and this is again backed up by FII. They were selling for last 1 year. They have come back into the Indian markets and they have bought 1127 crore equity in April, and DIIs have sold around 1275 crore in this week. So FIIs have returned to the market, and this I believe will be a booster for the Indian markets. So looking at the technical charts and the fundamentals, I feel that the rally in the market will be sustained, and we will see that charts giving a trend reversal signal very shortly, and that will take the markets to higher level. The mutual fund investors who have not seen any positive returns in their SIPs for last 1 to 1.5 years. Similarly, the lump sum investors who have not seen, so they will see a good time coming back to the market in around next 6 months' time. Portfolio of stock investments have not performed well for 1 year. So from here on, I feel that a good time is going to come, and people can look at investing lump sum amounts or through SIPs into stock. Investors can pick good quality stocks from textile, pharma, IT, and automobile sectors to get good returns in next 1 to 2 years. This is all for this week. If you like my video, please subscribe to the channel, share with your friends, give your comments. We'll see you next week. Thank you.